the Fed is kind of sidelined at this point, in part because if you take a look at this circumstance, it's not like any hyperscaler is investing because interest rates are, 3.75 versus 4. Basically has no impact. I mean, similarly, if you look at the housing market, I think mortgage rates have come down almost 100 basis points. And what's happened to the housing market? Like nothing. That's the answer. Nothing has happened. There's basically no impact. Like I see folks sort of charting the mortgage rate against like the tiniest squiggles on existing home sales. And it's like, look back over the last 30 years. They are at a 30-year low. Like who cares about the wiggles? Right. And I think that highlights that the Fed has really, is in many ways, in the same way they were inept at controlling the economy, slowing the economy on the way up in terms of rates, they're probably pretty inept here at stimulating the economy with rate cuts. And so what it'll really come down to, I think, is whether you see the cash flows coming from this investment justifying the amount spent on it. And that's really where the rubber is going to meet the road. And we see waves of this last couple of weeks. We've seen a bit of this story play out where there's been some concern. The question is, how long is it going to take before the euphoria starts to wear off?